Imagine a giant marketplace, bustling with activity, where people from all walks of life gather, not to buy and sell bread or cloth, but to trade tiny pieces of ownership in companies. This marketplace is called the stock market. But what exactly is the stock market, and how does it work? The stock market is where investors buy and sell shares, also known as stocks, which represent small pieces of ownership in a company. When you buy a share, you own a tiny fraction of that business, along with thousands or even millions of other people. If the company does well, the value of your share can rise. If it struggles, your share's value might fall. The stock market is the mechanism that lets these transactions happen quickly and efficiently. But let's take a step back. Why do companies sell shares in the first place? When a company needs to raise money, maybe to build a new factory, develop a new product, or expand, it has a few options. It can borrow money from a bank, or it can sell shares to the public. When a company decides to sell shares for the first time, it does so through what's called an initial public offering, or IPO. Investors buy these shares, giving the company cash it needs to grow. Once those shares are out in the world, they're listed on a stock exchange, like the New York Stock Exchange or NASDAQ in the United States. Here's where the real market action happens. Every day, millions of investors, individuals, pension funds, mutual funds, and even computer algorithms buy and sell shares. They might be trying to make a profit, save for the future, or support companies they believe in. Stock prices are determined by supply and demand. If lots of people want to buy shares in a particular company, the price will usually go up. If more people want to sell than buy, the price drops. These prices change constantly, shifting with every bit of news, rumor, or economic indicator. A new product launch, a change in leadership, or global events can cause prices to soar or tumble in just minutes. This constant fluctuation has drawn investors for generations, hoping to buy low and sell high. But there's no guarantee in the stock market. Sometimes prices fall for unpredictable reasons. Still, over the long term, the market has tended to grow, making it a popular way to build wealth for retirement or other goals. For most people, investing in the stock market happens through mutual funds or retirement accounts, where their money is pooled with others and managed by professionals. This helps spread the risk. After all, if one company does poorly, others might do well, cushioning the blow. But the stock market isn't just about buying and selling. It also reflects the health of the economy. When companies are doing well and people feel confident, stock prices often rise. When there's uncertainty or economic trouble, prices can drop. Despite its ups and downs, the stock market plays a crucial role in the global economy. It allows companies to grow, fuels innovation, and gives ordinary people a chance to share in that growth. It's a place where fortunes can be made, and sometimes lost, all based on the collective hopes, fears, and decisions of millions of participants. So, the next time you see headlines about soaring stocks or market crashes, remember that behind those numbers is a vast, ever-changing marketplace, connecting people, businesses, and dreams from around the world. The stock market is more than numbers on a ticker. It's the heartbeat of capitalism, linking everyday investors with the future of industries and innovations yet to come.